Investors and traders, welcome to the channel Market Chart Pattern. Today is 18th of February 2024. I hope everyone is having a great day and the weekend. In this video, we'll review the key financial stocks for the United States market. We will take a look at the ETFs such as the XLF, which is the Spider Select Sector Fund Financials, and also KRE, which is the ETF for regional banks. And then we will review some key major banking stocks such as JPM, Goldman Sachs, Morgan Stanley, Citibank, Wells Fargo, to name a few, and Bank of America. This video is for educational purposes only, and it is not a financial advice. With that, let's begin to take a look at the XLF. So this is the weekly chart for the Spider Select Sector Fund Financials. And here, one of the key patterns that we had been watching for was this ABCD. And we had further targets because this ABCD was actually broken to the upside, and this move is really strong. And we were watching for this 39 area because it is the 1.272 expansion of this BC swing, and also the 78.6% retracement of this entire move swing high to this swing low. And the market has been pretty strong, which is really good. And last week, in fact, closed above these levels, which is really good. Now, another week's rally will actually confirm that we are going to go and tackle these all-time highs coming around 41.50 level, and beyond that, there's a possibility that in fact the 1.272 expansion of this entire swing high to low could in fact be in play. And then of course the one-to-one price projection ABCD could see the financial stocks move much higher, but all depends upon how we're gonna close for the next week and this key level that we are really watching. Moving down to the daily chart, let's see. So last Thursday, for example, we had a really nice bullish day, and last Friday perhaps saw some of the profit taking, and what we have seen is a inside bar formation. So we just need to be watching our levels on the weekly chart really carefully. And let's take a look at KRE. So this is the weekly chart of the regional banking index, and here what we see is this key pattern ABCD around $52. This is what we were watching for, and for several weeks, in fact a month, what it has done is done an ABCD pattern formation right into this 46 level, which is 50% retracement of CD leg. And for the past couple of weeks, this level has been held, so this is really good. This is really encouraging. Further price projection actually indicates that if the price is able to hold this 46 level, then we could be looking at the $62 per share level for this, which will be the 61.8% Fibonacci retracement of this entire swing high to the low here. So this is what we are watching for the regional banking index. Everything depends upon the $46 per share level, so watch this level really carefully. As long as this is held, we think we have this ABCD moving around to $62 per share level. Let's take a look at Goldman Sachs now. This is the weekly chart of Goldman Sachs, and Goldman Sachs has just gone nowhere. It's just been in a sideways trading range, although the trading range is about $20 range, but it has been just trading in that for quite some time. And one of the things that we had actually pointed out before was we have this resistance coming in from the 78.6% retracement, and also this one-to-one price symmetry exists for the Goldman Sachs. So it really needs to, in order to move higher, it really needs to break out of this symmetry pattern so that it could in fact start its next leg higher. Otherwise, it is in fact just a trading range. It's quite a big trading range that it has been moving in for quite some time, over a year, and it's possible that this might move back into the range, retrace about 38.2% retracement or $350 per share level, where we have this 20-week moving average as well, and find some support from here and build enough energy to move out of this range to the upside finally, or it could just move and try to test the lower end of the range as well. So again, really watching the $394 per share level, because that's the 78.6% Fibonacci retracement, which it needs to really close to the upside in a convincing manner. Let's take a look at JP Morgan. Okay, so this is the weekly chart of JP Morgan, and whenever I look at this chart, one of the key things that I always like to point out is look at this fantastic trend line which exists in this stock, going back all the way to 2009. Here we go, and this has been one fantastic stock which just keeps on moving higher. And of course there have been declines, like major declines. This is like right into the COVID, this is the bear market of 2022, but the stock is able to come out of it. So it just shows that the kind of strength that exists in the balance sheet of this big financial behemoth. Okay, so where are we now? We have cleared the highs of October 2021, and we had a really nice weekly close. So the chances are maybe it's going much higher, and what we'll try to do is we'll try to do a one-to-one price projection. So we take this, copy this, and try to project areas for this. So it looks like 196, roughly $200 per share level is something this stock could in fact might try to attempt. And let me just do the expansion. There we go. And the 1.618 expansion. So what we can see is that the 1.272 expansion comes around 192. Above that, the 196 is the one-to-one price projection, and we have a big round number $200 per share level just above that. So within this vicinity of 190 to $200, it looks like where the stock might actually in fact be headed. And another way to do this is let's take a shorter ABCD. So let's take this, and yeah, so this one will also take us to in the vicinity of about 190 to 195 region. This is what we are watching in JP Morgan. Now let's take a look at Citibank or Citigroup. So if you look at Goldman Sachs stock, you look at JP Morgan, and you come and look at this one, you can see the price is way down, and it's really consolidating around the 38.2% Fibonacci retracement. This is what we had also mentioned previously. This stock is actually much weaker compared to some of its peers. Trying to improve, it had some rally here, but really consolidating around $55 per share level. So it really needs to convincingly break out of this 38.2% retracement level for it to be able to show a leg higher. With that, let's take a look at Morgan. Let's take a look at Bank of America. Here we go. This is the weekly chart of Bank of America. There was a longer term video which I did in which I explain all these cycles which are working in the Bank of America stock. I will try to put a link towards the end of this video in the caption for you to have a look. So this stock is also strong, and what we are looking at is this $35 per share region is where we are finding some resistance because of the 38.2% retracement. There's a possibility it could pull back right into $30 per share level, $30.50, right into the 20-week moving average. That would be something quite nice in my opinion, and maybe it could make a move higher than. Let's take a look at Morgan Stanley, and okay, so this is the stock of Morgan Stanley weekly chart, and what we are looking at is basically it formed a double bottom around here, and then it's testing the upper end of the trading range, finding resistance from the 78.6% Fibonacci retracement, It's also a double top here and around $94 per share level, 78.6% retracement, and this was another 78.6% retracement. So in fact, if we just draw it like this, you can see we have a trend line which is downward sloping, and we could also have a trend line drawn like this. It's in fact a wedge formation, and it's coming into its narrow part, which means that either way it's going to break out of it to the upside or to the downside. We'll have to wait and see, but it seems to be finding support from 20-week moving average, and just below that is 200-week moving average. From a retracement perspective, here we go. Let's do that. It looks like it's just around this 38.2% retracement, and yeah, so it's just hovering around it. So it's really important it just holds this, otherwise the chances for it to move lower and perhaps complete this gap from December 2020, this one, it might happen actually, because we also have one-to-one price projection. So really watching, it really needs to hold these key support levels. This is what we're watching in stock of Morgan Stanley. Last but not least, let's take a look at the Wells Fargo. So the Wells Fargo situation is improving. Apparently there was some news out about this stock last week, which caused a fair amount of rally in this stock, and the good thing is that it closed above the 61.8% Fibonacci retracement, and the chances are this stock might actually be starting a leg higher, and just if we just do a ABCD patterns, here we go. So this was the pattern we were watching because of one-to-one price projection. ABCD right at 61.8% Fibonacci retracement, but the price moved higher, so that's good. I'm just going to highlight it like this, so that way it's a little bit easier to visualize what we were actually looking at. So that's really good in my opinion, and now the chances are it's going to go and test this region around 56 to 58. Let me try drawing it for you like this. So I think what it's gonna do is something, it's gonna go and test this, and beyond this of course we could have one-to-one price projection taking the stock much higher, but we are really watching this in terms of the price action. So thank you for watching the video. This is what we're looking at in the key financial stocks for the United States, the US marketplace. Thank you very much. Have a great weekend, and good luck and good trading, and speak to you guys soon.